Yeah, but see, that's why Josh is good, because he plays off like a 6, but he's been +1 before, or +2, whatever he was.
Yeah.
All right, morning everyone. Let's kick it off. All right, U.S. markets, you see there after initial fall at the beginning of the day, down around 0.75%, rallied back to close to flatline. We basically tested flatline. You can see there 5 or 6 times throughout the day. Couldn't manage to hold it, but a little bit mixed on the sectors for the most part. I think it was a reasonable result that we ended up holding. Yesterday we did have better than expected some numbers yesterday, but we had a little bit of a miss on the ADP numbers. I personally thought that the ADP numbers would be a bit of a relief, even with that small miss, simply because the number, an on-farm number last month was so poor, and also people were probably worried about the weather impacting the number as well. So I actually think it was a reasonably good result. Friday, obviously, we've got the non-farm payroll numbers, which is going to be another monster data point. I think, provided that it's a reasonable number, I think we may end up being able to get a little bit of relief out of that. Asian markets this morning were higher. Ignore Shanghai there, is closed again, continuing to celebrate New Year holidays. But you can see there that the Nikkei managed to eke out a little bit of a gain. The Hang Seng up a little bit. And Australia actually traded really well, up 1.2% on the day. But the Nikkei, kind of the central bank there, and from the BOJ came in with some reasonably strong jargon, talking about inflation, saying they won't hesitate to defend the yen trying to get to their 2% inflation target. So sadly, the yen didn't weaken all that much, but it did manage to slide out a little bit from the highs of the day. All right, we've got Investec out with Q3 numbers today. We don't have a time for that. We've got U.S. earnings, General Motors at before the U.S. bell. We've also got Philip Morris before the bell. And then we've got 21st Century Fox as well at 3 o'clock. All right, market data today. We had the Australian trade balance is actually a little higher than expected. We have Halifax house prices later in the UK. We've got German factory orders. Pay attention to that one. That one might be interesting at 1 o'clock. Then we've got the ECB and the BOE that are coming out at 2 o'clock and at 2:45. So obviously that'll be a lot to focus on today. I think people will be interested to see what the ECB has to say about what's happening there and what they're looking to do going forward. And then and the BOE for that matter, because they've had such strong data as of recently. And then later in the States, we've got trade balance, initial jobless claims, continuing claims, and Bloomberg Consumer Comfort Index. So we've still got a lot of data out today, and then finishing tomorrow with the big non-farm payroll number. All right, let's get into the maps. First thing that we're going to have a look at this morning is the S&P 500, which is, we're going to look at it on a 2-year here and just see that we're kind of right on the cusp of support. To an extent, we're fighting to hold that support. You can see there we closed last night at 51.64. Trend line comes in right about 17.50. So kind of drop below it the day before. Yesterday we were down below it during the day, but we managed to kind of close at it. I don't know why this chart looks so funny. There we go. That's a little bit more clear. You can see there where we closed right at trend support. This is. It's fighting to try to hold this maybe. I think this is important because if we drop here, I think we are going to test quite a bit lower. So regardless, the next couple of days in global equity markets are very important. So this is one of the bigger charts that you're going to have to pay attention to. Though if we drop out the bottom here from 1750, it could be good night nurse for global markets for the short term. Okay, we're going to look at Anglos. I'm going to show you guys on a 30-day. just having a look this morning, and you can see really this 255 level. We talked about 257 on the wicks. We saw some numbers around 257 going back a little while, but really kind of up around 255 you can see is more or less where we were topping out. We popped up through that over the last 5 sessions, and we had every excuse to friggin' sell off here. I mean, we literally have had every excuse. We had copper, which is down 9 days in a row. We had big sell-offs in the U.S., big sell-offs in the U.K., everywhere things were getting hit, and this thing's just managed to hold up. So it's incredibly impressive. If we trade above 265 today, it could be about some of the quickest 10 rand you'll ever see in your life. So just keep an eye on that. Above 265 on Anglos, I really think you got to buy the breakout. I particularly like it on the intraday if that's what happens. All right, next one. We're going to look at Sasol again because it's coming back into play here. This is our level here. We know all about this level 520. We've talked about it several times. And what we're seeing here is a beautiful retest of this 520 level on a very cleanly defined flag pattern. I think to really get out to the upside of it, we're going to need to see it get above 530. And we, obviously closed about $8 below that in the U.S. trading last night and here locally. But that's definitely where you want to look to enter and take some risk. Is on Sasol here, close to around 500, close to around 520. Maybe looking at a stop below some sort of trend support here. Call it 505-ish, 507-ish, something like that. But that's what we're going to look at on Sasol. Remgro, I just was looking at this because it's had a big pullback. It's pulled back 15% from the highs. Obviously, this is more of a defensive and the nature of its business. We're kind of coming back. 180 yesterday where we closed is really just testing what's been the lows going all the way back to July. I don't think this is any sort of significant level, but I'm just kind of showing it there. What I really wanted to show is that the level here at 170 I think is really well defined. That's definitely where we broke out. I remember even talking about that at the beginning of last year. We were all over that when that happened, on that breakout from 170. It's so well defined, this 170 level. I think somewhere between 170 and 180, definitely a little area where you can afford to maybe take some risk on Remgro over the next few sessions if you get an opportunity there. All right, Anglo Gold. I'm showing this one again. I know that we've talked about this one several times, but what I wanted to, let's just look at this thing again. I know we talked about the level being 160. You can argue that the level could be as high as 163 if you let's just take this all the way across. That lines up beautifully there, and look how we continue to fail. So we did say the level was 160 before, but really I think the level is more or less 163. And yesterday again we managed to fail it after the gold price popped up to 1272, 1273. This is, if we just zoom a little bit even further forward, you can see here 1, 2, 3, 4, 5, 6 tests of this level where we haven't been able to pop 6 days in a row where we've tested this level at 163 and haven't been able to get through. I reckon if we don't get through in the next day or two, this thing's going to give us the Acapulco cliff dive, and it's going to just nosedive back down to around the 200 day, which is closer to 140. So just watch that one closely. Could also be helped to come down a little bit by the rand, which is starting to strengthen out right now. We're looking at 1108. If we pop through 11, I think you can really stop out a hell of a lot of shorts in the rand and other emerging market currencies for that matter, and can really trigger an enormous rally. And like I said, this would be one of your, obviously they'll probably put the gold price under pressure as well. This will be one of the ones that'll be hardest affected by a move like that. All right, ShopRite. Look at ShopRite here, and I hadn't looked at this before. I was just going through this morning and by chance went back to a 5-year on this thing, just really trying to look for a little bit more support, and found at 140 there's actually a hell of a lot of support there. That's where we broke out back in 2012, and you can see, when we dropped this 158 level, it puts a huge downside target from this drop of 158. What target does that even work out to? Call it, $33 to the downside, which puts us well below the 140, the 140 level. But 140 is definitely support, and we tested that the other day. You can see there we did test down to 140 a couple days ago. If we manage to hold at 140, if we get back down there and have a couple more tests and can't get below it, I would say that's probably a great little level to have a nibble on some ShopRite. All right, and the last one we're going to show here is Old Mutual, but we're going to show it on London, and have a look at the level here around 170. There's definitely some sort of a level here around 1 pound 70. But if we go back and we look at all the way back to a 5-year, you can, if it's going to give it, there we go. You can really see here about 165. I actually think is a much more important level. But somewhere between that 165 and 170, there's a beautiful little risk range that you might be able to take on some risk in Old Mutual. Remember, if you're playing locally, probably, if we do get a nice rally from here, that rally will probably coincide a little bit with some rand strength in it, if that happens, obviously you're not going to get the full benefit, the brunt of that. If you want to put the trade on and you have the ability, I would definitely say buy it in London for the time being. Now, that's it for today, guys. Thanks a lot.